So what we can do is like, I mean, for now, this is how I see things. It's just, it looks some sort of a diagonal here to see if we by like either Monday or Tuesday, we can get this one more push here. Now the swing just turned up yesterday as well, as so which is a very good sign. So now that would give me a much, it's gonna make my job easier because now I could work the wave count along with those swings side by side. That's what I want. That's my biggest challenge every single day, okay, when I'm fighting prices. I want these two things to go side by side. When they go side by side, because they're two different strategies, okay, it's gonna work. Because if one fails, I know which one failed, and I know the other one is gonna give me the exact read. It's just to click them both is just the most challenging part. So as long as the swing just turned up now, if the swing just turned up, okay, remember now you need 3 more days of a lower bars for the swing to turn back down. So now it took 33 days. Remember we looked at it yesterday. It took 33 days for an S&P, okay, to turn the swing back up now, which is technically more than a month. So once the swing turned up, that doesn't instantly goes back down either. I mean, I'm not saying that we cannot draw 50, 60, 70, or 100 points to the downside. That doesn't mean that that the whole swing is gonna, because you still gotta count 2 more days because we're going out with one bar for a day. So if we manage to complete five, then we'll set back in two, and then from there you we can project this upside. In this either is going to be a third wave, or the other case that I made it is here. Okay. So the other thing what we did here, this one here is going to give you a much better read. Okay. So in this is we simply mark this as an ABC, make this thing as a W. Okay. And then from here, remember we need five, either one or A. Diagonals, remember, only forms in wave 1 and A. So then from here, we can call this, there's going to be either a wave 2, it's going to be a higher low because the low is here. We all know that, right? What we're trying to do is we're trying to form 5 swings to the upside. That will give us another counter swing to the downside, okay, is to make complete 8 swings. So we could do either one, if this low stays where it is, we can either make this thing as an A or 1. 3 down is going to be either B or 2. And from here, the C wave, okay, you know that is always going to be a 5 waves because it's an actionary wave, right? So the C wave right there is going to have 5 waves. So we're going to have 5 here, 3 here, and 5 here. If this fifth one is starting to extend, it can turn into a third wave. If it fails, somewhere around here in this zone, then the Y wave has to come back down like this again. So you need another 3 down as in A, B, and C to come back in Y. So that will make a complex correction. Okay. So there's a lot of time there. So you cannot project anything like this to the downside. So this is all here now. So I did it all in one chart yesterday. I was like, okay, I'd much rather lay it out on a 1 hour chart. And then from here, it's the same thing, but this is just on a 30-minute chart. So this is just, kind of gives me it's the same high and low. It doesn't really matter, So if you can do this one on a 30-minute chart or 1 hour chart, it's the same thing. So, so yesterday we held 61.8, managed to move back up. But we just, the point now is I just wanted to see if we can complete this. Now, the other thing is this, that we, I gotta do this. Now the price is back right here into the channel. Remember we're talking about this channel. I don't want we don't want to lose the like we want to move this channel. We want to leave it the way it is. Okay. This is the high right there. This is the lower high. So that was the first low right there, and this was the biggest, the pop right there, which is the over 5% move. I think it was. Yeah, 5% move. You see, then what happens is that we had a big throw over here to the downside. So what happens here is if you note the price made a mean reversion back inside the channel. Price will go back inside the channel. That's what those, remember we talked about it last week, those linear regression. The linear regression is those based on those 2 standard deviation or 3 standard deviation move, where the price does fall below the linear, and if it finds the midpoint, that's where the price is going to make a mean reversion. The price goes right back toward to the midpoint. Where's the midpoint? Right there. You see? This is what you call when you have a big, huge throwover. It doesn't all happen in a day or two, but then the price, whatever the price is going to form the low, is going to make a reversal. That's your mean reversion right there. Okay, so I've seen this thing happen thousands of times. So now the point is like once you have a throwover like this, you should expect the same thing happens here to the upside as well. Keep that thing in mind. So I mean, as a thing, if his policies, if he, what if what I see is that he's going after China more than any other country in the world, and she is his friend. Okay, one way or another, China knows that keeping these tariffs is going to hurt them and it's going to hurt us. Okay, so nobody really actually wins. They're going to meet up. They're either going to have a phone call or they're going to meet in person. And when that happens, is that the thing is just when they will agree on a whatever negotiation they're going to do, is when the market is going to take off. He's trying to level this thing. It's just like his approach is like all these. You look at this way, like how quick India, Vietnam, Japan come to, is sending their teams to the White House to sit down. Let's negotiate the deal. Let's make a deal. I mean, Vietnam, like all these, like these are the countries there that they know that they cannot survive without United States. So these companies are willing to make deals. He's going to do the same thing with China. But how long is going to take that time that in between that the deal is not getting made, and that's where the pressure is going to come because prices starting to go up because everything is moving, right? So the containers that are coming over here now, people has to pay the price to get those containers out of those ports. They have to pay those tariffs. So those prices will start, we're starting to see at the stores and stuff. So it takes time. It doesn't instantly is going to happen overnight or in a matter of couple days, you know? So you could hold the containers there, whatever, there's the shipments can put them on a pause. Jaguar did it, a car company. They held like I don't know how many containers at the port. They're like, yeah, we're just gonna leave them at the port, negotiate a deal, then we'll pay what we have to pay. Then you can just let those containers go. So they could yeah, it will disturb the supply chain if you're gonna hold containers because now your production line has to take a pause as well because your products are not they're not getting delivered. Now you're basically overstacking everything at the port. So that stuff has to get cleared first. So the rest of then the next shipment will come. So the thing is this: you really don't want to mess up with the supply chain because the globe is moving. Ships are coming here every day and night. and the goods are coming here and they're just going all over the world. So, I mean, earnings are, is gonna, this is, I think from here, is policies and along with earnings. So I mean, pretty much, a lot of us will be start looking for, especially these big companies, to see how they report, how market will react. The first one is Netflix is not really a huge macro play for the tech, unless the next week is when we're gonna start seeing some of these big names will start reporting earnings. So either way, I mean, what I am planning to do is this. I'm going to, because now the swing just turned up. What I'm going to be watching is to see if we can complete this five-way move. Then I'm planning to put a hedge on for this move. Okay, either it's going to be a B or it's going to be a two. We just got to have to buy some time, and I'm going to price out a butterfly just to the downside like this. Now, if this trade will only play out if we don't get this kind of move happens here, you know? So we'll see. I mean, I'll take a shot and see if we could, if first we need to complete this move first. Once it gets completed, either it's going to be a or one, and then we just look for this counter trend to the downside. And that's where I can set up a butterfly or you can do a spread to the downside. Then we'll run some retracements here in a wave two, either on a B, or B. So I need those fib prices for me to pick which strikes to pick. I can't just randomly just pick strike prices. So because volatility is elevated, so I want to make sure if we're gonna try to play this move, it's gonna barely gonna have no theta, okay, or it's gonna have a positive theta. So that's how I'm going to structure the thing. But I am not playing this crazy amount of elevated premium and you're just getting hurt. So, so we'll see what happens. I mean, that's the 50% retracement from this from peak to trough, which is 54.51, which we already right there. It already hit them right there. 54.51. So we backed off all the way down here to 51.21 toward the 61.8. And now we need to see if we can just make this move back here toward this zone, because we have a resistance sitting here at 55.04, which is this low. Okay. This is because this is the first low that we had, and because that's where we had the biggest retrace, the retracement to the upside, which is the 5% move. So this zone right there is going to be a very sticky zone right here. Why is this? Because we have a 50% retracement from peak to trough. We have 61.8 sitting here at 54.75. And we have this resistance sitting here at 55. So this 50-point zone right there is going to be a very sticky zone. I can tell you that. Okay, so when you have a cluster of fibs that's trying to stack very close to each other, your price is gonna take a little hard time slice through it. So from here, if then you on if the price does manage to move higher, if because some sort of a big news or whatever something happens, and we got a wall sitting here as well. See, I take this high to this high, it's gonna connect right there at this number. So instead of like picking up, the cute prints to the upside, the bottom, the best part is this is to draw and make a one zone right here to the upside. This zone right there. Why is this? Because we have 61.8, 5600, channel resistance, 5500 for this low, 5475, which is 61.8, 50% retracement, which is 54, 51. So this is our gonna be our 100-point zone to the upside from 55 to 56. Okay, so there's a lot of resistance here. There's no denial. And I don't think that the price is gonna rip through like this, you know? So this is what I am gonna watch. This is what we're gonna track on day-to-day basis to see how the session goes and how the wave, which we're gonna do it here. And then we'll see, then we'll make the case here for the wave two, or we will make the case for wave for this B wave. And then from there, we just see if we could either expect X wave, because your X is going to take some time. They call connector X, because if you have a three-wave decline, you don't have X wave like this shallow, because this is just a long time. Yeah, X takes time. So you basically, what it is like, these are like a bunch and bunch of zigzag moves. You know, you got three down, three up, three down. So you have another three, another three. So it goes like this. So we just come right back down. Either we just keep coming back down and retest it, or the Y wave can stay truncated. Very common. I mean, the typical downside retracement for Y wave is 61.8. And then if you just want to take an equal measured move, that will be that 100%. So the distance travel here projected whatever the price will make the high here, and then the 100% relationship. It can happen, it might not. So that's the way, then we'll just have to take it day by day. I can't sit here and tell you or tell the rest of the world that we are doing this. This just not the way. This is not how I'm gonna um true, yeah. So this is now how I'm gonna lay out and tell, like, oh, we're gonna go here, we're gonna fail here, and we're gonna put a bottom here. It's just a dumb way to do analysis, to be honest. Corrections or counter trend moves, they're very difficult to predict, and they're just can you could um yeah, I can, yeah, of course. The Y wave is, when you remember, complexes are like this, right? It's very common for this Y wave, okay, to be truncated. Now keep in mind an S&P 500, especially. I've studied this index for, I don't know, for over a decade now, or any Mag 7 as well, okay? Any stock is going to have a big volume stock, like high beta stock. When you have an extended, if you want to make a case, if you have an extended W after a three connector X, you can have a shorter Y. If you have a shorter W, that's what you get, the extended Y. It's either or. You don't get complexes, you don't get exactly measured moves. Complex is very tricky. That's what they call complex. It's because it's complicated, complicated, right? Because there are a bunch of, I'm already start seeing, because how much price overlap is already here now compared to this move and this move. These are more directional move. This is more directional. You see how fast it comes back down. And we figure this thing out because we have a gap here, gap here, gap here, gap here. When you have acceleration gaps, it's a 100% is a third wave. I can just write that thing down on a piece of paper. There is no wave will give you acceleration gaps back to back, because the third is the one that moves. much faster than any other trend wave because considered most of the longest, it has to be the longest wave, right? So we all know that. So it's over here. So which is good. Look at this low here. Can you beat that? Which I laid it here. Where's my other? This one. This is the daily wave count. This is more aggressive as a 1-2 count, right? If we're just going to start looking at the bigger picture, it's a much more aggressive wave count. So it's the same. This is the bear market low. We can count this thing as a 1, 2, 3, 4, 5, a 5 completed waves. And then from here, we just simply take this 3 wave to the downside, WXY. It's just that's 48.39. We put a 48.35 low and the high of 4,800. This is where I think, wherefore, oh, okay, you guys have to pay attention. This is a leading diagonal. A leading diagonal, the wave 4 must overlap wave 1. Okay, if you have a fourth wave sitting up here up on the top, that doesn't consider the diagonal. Okay, so diagonals, your 4 overlaps with 1. A trend wave, what they call, a motive wave or impulsive wave, your 4 must stay above the wave 1 high. That's the hard rule. So, but what we're trying to do is that if the market did form the bottom, we need 5 waves to the upside. How are we gonna go up? We can't go up in a 3 wave. 3 wave is still considered a correction. So if this is the third wave, then the price just needs to come back down like this. So now we're trying to do the market is trying, I think it's already put a bottom. So what I think now is up like almost, 10, 11% off the low, off the low. Now we're just trying to see that how is this develops first, and then the counter trend move that we'll look for. So, everything is beside that. So basically what we are looking for is what? This is going to be our zone. Okay, 50%, 61.8, 6. So we have, well, first we need to get this, we need to get above 54.81 to complete 5. This is where the price should make a 3, come back like this. I don't know where it is, and then we'll project the wave 2, something like this. But I don't know where this thing is going to settle. And then from here, then we'll look for this, either a third, or we'll look for the C wave. So it's going to be a couple shakeouts with earnings, which is on their way. So I don't think that all of these Mag 7s will pass the test with flying colors. Some of them will miss. So let's see what they say about tariffs and stuff, what their supply chain, any issues, and this and that. And because they will report, because the quarter is already passed, right? So they will report their earnings because this nightmare just started, like what, 2 weeks ago or so. So their numbers, all the business that they have done it before is gonna all reflect into those earnings. So I don't think there is gonna be a big dent coming up for these stocks because none of these things took effect 2 months ago or so. All these tariffs are going up to 100 to 145% or whatever the number is. So the earnings is going to be okay. Okay, it's just a matter of the um, the second quarter, how it will reflect the third one. That's the debate that we're gonna see and what these companies has to say. Remember, it takes time. And market is is forward looking. It's not never trades on on today's rate. So so we'll see. I mean, earnings should be okay. I wouldn't be worried that much about it. Financials did good. Look at Bank of America. Bank of America said what? Retailers are spending money. They're seeing a massive increase on a credit card spending. So what does that tell you? With all the look how the CPI print came out lower. Look at the PPI print came out negative yesterday. I was shocked. I looked at the print. I was like, wow, that was a huge um a print consider as like looking at the core PPI and things like this. Just like I don't know. I mean, I asked my wife. I mean, she goes to stores and this, and she's like, things are like really that bad. She's like, well, there's some items are, yeah, you can look at them, but they're okay. It just, but to us who are tracking the market and looking at these, all these data prints and stuff, we're just making a case like the world is ending. You know, it just, people are mad. Okay, they started doing these rallies last weekend because their retirement accounts are down. I, I mean, I bet you that thousands of people that went out last weekend for these rallies all around the different states, none of them are in the stock market trading like the way we do. They're just a regular, most of them are blue collar workers. Whatever 9 to 5 they work, a couple of hours of overtime, they're just trying to putting their money toward their 401k, and they realize like, shoot, my 401k is down like 10-15% now. Now the person is pissed. But those those people don't know nothing about stock market. They don't know nothing about economy. All they care is about their 401k. And if they have a college saving fund that they're putting money toward their kids. That's it. We're the one who just like literally tracking price, stock market, tracking the data, what to make out of the economy, if there's going to be a slow growth and this and that. It just like, and then on top of it, the CNBC is milking it day by day. Like, oh, Japan market breaking news down 4%, market a circuit breaker, and this. It's just like, oh, come on. Really take a step back, take a breather. I mean, come on. I mean, what happened, what happened. Yeah, there's nothing we can do, but God, no, I mean, shit, the sun is going to come out tomorrow. Trust me. Don't make it sound like it's just like the end of the world. I mean, it's just a little cycle is going to go through it. We're going to go through it. And I'm going to show you this one. Just wait. Um, so this is how we can just leave things the way it is. I mean, for now, and see, um, how we can I mean, if you look at here, these are just all four charts here. Um, this what you see like these percentage ranges, which are called extreme moves. So the extreme moves is like it takes the low, it tells you exactly what this is what the closing price was yesterday. So tell you exactly how much you're off the lows and how much you're off the highs from the lows off the highs, right? So that you have almost 11 on S&P, 13 on the Qs, 7.35 on the Riot House, and almost 10 on the diamonds. So if we just simply if you can say like, well, if this is too complicated, is more advanced, because I don't know if it's a five, it's gonna be two, and it's gonna be this, it's gonna be this, and like you can sit here. If it's gonna be a W, it's gonna be an X, it's gonna be a Y. I mean, if you want to go through that, I will walk you through it. That's fine. You know, look how. our price. I was just watching this thing. Watch this low. I use a lot of channel. Watch this low. Look at this. Look at this. It look at this. The reversal back here failed right there at the wall. And then it just rips through it because it made two failed attempts here. Once you make a two failed attempt, third one you're gonna go. It's always like this. Any support right there, most of the time, if you have price comes back here, bounce, come back, bounce, you're gonna go third time. You know, it happens. It's the same thing with the when you have a top here, when the price comes, hits them, goes sideways, back to the wall, hit it again, come back. It's third time, it's gonna go. It's gonna clear this. Yeah, once you if especially these large cap indexes, once you two attempts you make to this line right there, you have a very good chance the third one you're gonna rip through it. So if you don't want to go through this stage like A or B, C, X, Y, whatever Z you want to do it, you can just simply focus on this one. Okay. Take your fibs, draw from your peak to trough. Okay. Throw a VWAP on it. All right. And a 5 moving average. You're good to go. To be honest, just to be, sometimes he always says like having a simple analysis is much better than the complicated ones. You can make it complicated if you wanted to because all you're doing is to yourself. If you just simply sit back, put these four charts on a one single screen in the monitor that way I have it, it's gonna it's gonna give you a same upside instead of you sitting and scratching your head and thinking like, oh, this is a W, this is an X, this is a Y, this is an A, or this is a B or C. I mean, you just that those are the things you're just technically doing to yourself. Okay, you're just making those things really complicated. If you thinking like, oh, I'm gonna ride A and I'm gonna ride the B, then I'm gonna ride the C. If you have that kind of approach, oh, it's not gonna be that easy. I'll tell you that. You corrections are very difficult to trade. Those are counter trend moves. So if we just simply look at here, where we have our upside. I don't have a weave up here. Where we have our upside. Our downside is a 180. Okay. Yeah, we poked a point two here, there. What do we have on the upside? 189. 189 was already tested here on that big, huge pop that we just had. So what will be the next upside we can expect? 199. That's a 38.2% retracement. Okay. The weave up sitting at 212. But this can come into a play as long as the low holds. Okay, so you just have to keep that thing in mind. So your upside is here as long as you hold the low. If the low get taken out, then you're wrong. Same thing here. 48.35 is our low. All-time high 61.47. What will be the next upside? 54.91 was almost there. Okay, which is that 55 number that we just talking about. What will be the next upside? 56.46. What is this one? 61.8. So if we gotta have to say like, okay, well, what would be our upside first initial zone that we can make is right there. That's exactly what I showed you before. 55 to 56 kind of range is where we have our, the next upside if the price going to go up. Now the swing right there, as you see right there, has turned up yesterday because now we had three higher bars. So in order for this swing to turn back down again, okay, now we need three more lower lows. We need three lower bars. Okay, so technically, if you look at them, simply look from peak to trough decline, we're just almost sitting almost halfway through it. We're just sitting right here in the middle, and now we're just gonna wait for earnings. Now these earnings and his policy, the drama, either we're just gonna come like this or we're just gonna move right back up. Just right there in the midpoint. If 50% is your midpoint, which is what 5500 level on the S&P. Now, if you come back here in the Qs, we're off 13 off the lows, down 16 from the highs, right? This is where the price closed yesterday here. VWAP sitting at 470, 50% retracement sitting at 471, 487 sitting at 61.8. So this is going to be a zone for the upside. So VWAP is right there. So we got 455 to 470-ish kind of this is the pocket that we have, the air pocket that we have to the upside. Now this is a channel that which I'm planning to keep. Remember, we keep talking about this because we take the throw over we just had. Now we just need to see if we can expect the same throw over here as well, which is gonna happen. I don't know how soon it's gonna happen, but it's gonna happen. You're gonna see the same
Well,
reaction back to the upside.
why there's no VWAP showing on SPX?
No, there's no VWAP. It's on a
Yeah, well,
SPY.
huh?
On a SPY, there's no volume.
Oh, I see for SPX, no VWAP for SPX.
No,
Okay.
no, there's no volume on S&P 500 on volume weighted price.
Right. So do you have this chart for SPY?
Oh, I gotta change it. Let me see if I can change it back. So on this one, what we can do, we can throw one from the bottom, 514, and one from the top, 552. So we have two of them. So we have 434 and 470 on the Qs. And what we can just simply take the same thing here. So if you don't want to make things too complicated, okay, you can just focus on this one. And I think I posted this thing on Twitter as well. Just you know, I there's look, I'm a very advanced trader, okay? And a lot of time, I mean, I can go so deep into to do all the chart and the price analysis and stuff, but it's at the same, it's just gonna start giving me a headache in the end, to be honest. Like, geez, it's a one price. Which way you want to look at them, you know? Simple chart sometimes it's way to go, to be honest. It just cuts all the noise, but we just we don't know where the low is. It's just like market will find a bottom eventually at some point, but and then where is the upside? It's all here. I mean, these are the exact strike prices that we could expect that if we wanted to play to the upside. Now, if we're bullish and say like, hey, I wanna play the upside, you simply pick a 547, 562, make a call debit spread. That's your upside play. You got a VWAP sitting at 552. So you got room from here. Now the question is if the price can come back down here to back to 520, and now you sit in here with a spread of 547, 562, and a spike of volatility, it's gonna hurt those premiums. So to time the trade and how fast it's gonna go and this and that, well, this is the probability game that we all play every single day. Nobody can time anything, you know. Sometimes you can nail it, sometimes you're gonna just kind of say like, okay, well, it doesn't work. So when you have a massive spike in volatility, the odds are a lot of your technicals are gonna be out of the window. And all these like the only thing, because I'm not getting any buy signals, all I have is mean reversion signals. That's the only thing that is literally keeping me a little more optimistic and thinking like, okay, yeah, we took a lot of beating. I think it's a matter of I showed you this one the yesterday as well. This is the daily chart. Um, I've spent months, okay, making this one. Then I have back tested this one. I know how it works. It has a very good results, and well, there are times they're gonna fail as well. Which is there's no such thing. But if I look at this thing overall, it has a very good results, right? I mean, that's the failed one. This one failed. This one was good. Okay, finally got the 5% move to the upside. 5% move being on a trade for a couple days or couple weeks, that's a pretty good payout. I mean, a 10% is the average return for the S&P for the year. We're doing 10% in a matter of one session. I mean, forget about one session. We're doing it like in 2 hours. Okay. The entire move for 1 year is just in in two in 2 hours we have 10% down. It's crazy. That's what the volatility is just like, and everybody was like, oh, when we had a bear market and we got the sharp reversals back to the upside like this. Well, it can go up as well. So we don't know that. This is what it's keeping me a little more optimistic right there. This one right there on a weekly time frame was off by 2 weeks, you know? But the point is like it doesn't mean like every one of them is gonna um is gonna play out, but it has a very good results. Now if I go back here, that's the bear market. This is the weekly time frame. Now if we go back here, that's the COVID low right there. So if you look at the indicators right there, whatever you follow, MACD, RSI, and all this, I'm looking at like this week we just had. We started the week on Monday, and I'm sitting looking at RSI on the weekly time frame. We're sitting right there, 8. I'm like, okay, so what is even a point now? Okay, for anyone to even buy puts. I'm not talking about a single sessions where we just had a couple reversals. Okay, that's the day uh, the day trading mentality right there. We're right here. This is the COVID low when RSI was at 8, and we just had now. So the point now is that when you want to buy, when it's going to go to zero. So these are the things that, I mean, we had few trades that we did, like, okay, it plays out. I mean, we're not gonna do more. I mean, I'm just like looking at everything. I'm just like, we're sitting right there at the COVID low of an RSI, which is that 5-1. And now we're back to 35 as of yesterday close. Like, I'm looking at this, then I'm looking at this, and then at the same time, I'm looking at this. I was like, there's so many of these are all lining up together. I was like, just let's buy, you know? Now, this has all happened on what, on Monday, Tuesday. I think the pump that when we had a 3,000 point rally. Yeah, that was on Wednesday. So I as you know, I put a spread on SPY. As soon as I saw his tweet that buy, he wrote like be cool and buy the market. I just like, first I was shocked. I'm like, what exact as it, like, first you thought like, is it real? Is it some fake news? Somebody fabricated that thing? The people like the other day is like, now it's like it's time to sell. The people changing those texts, just to send a message out. So I was like, okay. I was like, okay, fine, let's buy the SPY. I just right away, I just bought SPY. I was like, screw it. I was like, I said, there's something if he's saying like buy, be cool and buy. So I put the spread on, and then at the same time, I had an open spread on that. I was down $1,000 on that one. So I had a lot of time on that one. I was like, okay, fine, we'll see what happens. What is it? Whatever's gonna happen, we'll deal with it. And then I was like, okay, you know what? I'll just roll another one. And at the same time, I had ES contracts, four of them that I had them that I was holding, and market started moving like crazy. So that girl right there, name is what, Maria or something. Yeah, she's just like, I don't know. She said like, "You sure that you're buying this?" I said like, "Yeah." I was like, "He's saying to go long, just go long. Let's go." You know, you kind of like sense it like you have to look at this way like it's so weird. Like a president of a country is literally telling you to buy the market. It should like really trigger like something is up. He's basically technically just giving you a heads up. And then exactly what he said, like, yeah, I'm gonna put a pause on it. And then the market just took off. I mean, yeah, it got faded. I mean, that's beside the point, but the move is just it's like a once of a I don't know I don't know when next time you're ever gonna see a 3,000 point hike, but that was just one of those in the history books. So these are the signs that I'm like looking at them just like the same time, like, okay, fine, I'm bullish, bearish, this and that, whatever you want to call it. I was like, COVID, same one here. I was like, if this failed, this one is gotta go. Second one, you don't gonna fail that many of these ones. These are very good mean reversion signals. So, anyways, back to this. I mean, it's just a weekly time frame. Just if you want to leave them simple, that's the way it is. 552 VWAP, 512 to the downside. This VWAP right there at what 434, which was Thursday low right there. Look at the low of that Thursday, right exact at the VWAP, and it got the bounce. Check this low here. It's crazy, right? Look at this, 432. It probably moved a little bit, poked a little bit, 2 more points yesterday because the market moved up. So now the upside is 470, which is 50% of decline from this peak to trough. I mean, we're almost at the mid, halfway there, except for this pig right there. This one is a horrible week, compared to this one. This one, all these three swings that turned up, if we go here, except for this one. You see the tiles are all green now as of yesterday because now you see the line just appeared to the upside. Look at how the week went for a small cap. Monday, outside day. Tuesday, inside day. Thursday, that was the big pop right there, outside day, inside day. Yesterday, even it closed with the inside day. This is crazy. This small cap is just like, what to even make out of this, this garbage can. Can at least move something, like trying to establish a trend or something. Nobody wants it. It still looks like it because there's no, does it even look, because there's no buyers here. Can actually put like, people were all looking to buy this or Qs or gonna buy diamonds. But this is, I mean, I compare this. So you have a SPY here in a lower bar, outside bar, right? Higher bar, inside. Outside bar, huge higher. That was that 3,000 points pump right there. Inside, inside. And then yesterday, higher bar, still inside bar. Now, if you compare all of these, they're like the same one. This is the one. It made me a very interested. When I saw this one after this decline, this they call the outside bar at the low. There's a very, very good chance, like this one right there. This one still went sideways, but not the Qs. Now, if you notice the low, how Qs put it here at 402. SPY would just only manage to put a lower bar that day, not the outside bar. That's for the day. So when I looked at this and this, I was like, okay, that's a very, very good sign because you're coming down here, you're putting this kind of a bar. It's because this is the same one that happens here. You see, you always gotta pay attention to these outside bars. They're very tricky bars. It's very difficult to make a case out of the next day because because you know this candle that it engulfs both ways because it takes out the high and low of the previous day. But it forms on the bottom after the beating on a stock. It has a very, very good chance that this gonna is gonna form the bottom. Because these ones forms either bottoms and tops. Doesn't mean permanently, but for the next couple days or a week or two, the market will get some sort of a relief rally to the upside after putting these kind of a bars at the bottom coming down or this kind of a bar going all the way back up to the top. Not in the middle. Not if the price is kind of going sideways like this and you have an outside bar that swings like this. That doesn't know. That's not the point. The point is either on a very top or the very bottom after a huge rally to the upside or a huge decline to the downside. These ones you have to very pay attention to these ones. They do form bottoms. And I can show you hundreds and hundreds of charts. We'll give you you can see it that how many of them forms tops where the price will start to take a full reversal back to the upside if the price had a huge run, and at the same time on the way down when you had a big decline to the downside, how is this one is trying to manage to form to form the bottom is where you should be really interested buying the next day if you see something like this after a huge decline. So this is we're gonna watch this and see. But remember, I mean, our if we gonna go back to our week was the down week, you see? Now what I see here is like, I mean, remember time frames are very important, right? The daily swing turns up as of yesterday, but the weeklies are still down. See, they're all false red because it's gonna basically what you're looking for. You're looking for 3 weeks of higher highs for the weekly time frame swing to turn up. So it's gonna take it's gonna take a lot of time. 3 weeks is very easy to say. There's a lot of price action. So I mean, looking at this, how the week ended, okay, on a positive note, with all the volatility and everything, we have a 13.87% range of this week alone. Okay. This one was 11.87% range, 11.32% range, and 16.26% range here. It's always going to be higher because of the tech. Okay. What I see here on the time frame is that I'm well aware that this sucker failed. Okay. And this this one and this one. And as you know that from the last this week, I've been buying. I'm anything that I'm trying to either I'm trying to hit on whatever the AbbVie or Honey or the what were the other trade we did. I'm just trying to look into other names, just trying to see not to go more into a tech yet because of the earnings and stuff that are coming in, just trying to see if we can go toward the healthcare, trying to see if we can find something else, industrial or try to play another sector. I see as a positive from here. I mean, if it's going to be a mean reversion, was basically that's what it is. Um, to see how much of the price will recover from here. Okay. You don't see this, especially in a weekly time frame. I haven't seen it. Even the fact that I mean, I've tested this thing on smaller time frame, didn't really work. Daily is always a good one. Weekly is, but I haven't seen this one in a very long time. This one right there. The last time I had him was here on the queues. That was back in this 2022. So it's been a couple years if I go like this. So there's a lot of time, like not these two. This one had a big pop, 17% upside based off from here. This one right there has 24% upside. So this is week by week. I mean, this is a lot of time you're talking about. So because you're looking at a weekly time frame. So look at that range here. It's just crazy. The last time we had a same range was here. So I mean, what market is doing, which is I don't know what week is this. Yeah, right off here. 2020. Yeah, that's COVID. Is it? Yeah. Yeah, that's COVID. That's what I'm saying. Like everything that would just happen this week is literally went to the COVID levels. The COVID was the crash, right? We all know that. So, oh, the light blue one is the go no go signals. That's the one, I have them the they these are the go no go signals. They come pretty handy as well. Sometimes I keep them, that's a really good one right there. The last one was here. This one, they haven't taken out that low. This one was kind of failed. Yeah, it failed. The light blue one is so I see like it's not market is not really actually trending back to the upside. All we're just looking for is just the mean reversion to see where we can find a floor, where the volatility will come off the option market and what we can see like, okay, well, we want to buy something cheap, right? I mean, if the market is down 20%, I mean, if you don't want to buy, like when do you want to buy? What are you waiting for 50? I don't understand. I mean, we're everything is down to COVID levels. R8 RSI. I mean, on a large cap, tracks 500 companies that run the entire market, like it's down to eight. Okay, what's the worst it can happen? Go down to five? Well, it's not going to zero. You know that. I don't see any indicator ever went to zero level. It's gonna move. So now it's trying to neutralize, like, everything is just basically back to the 50% retracement from peak to trough. So this is what, again, I mean, I trade what I see, not what I think. As you know, that I'm not opinion based or calling bottoms and tops. Don't ask me that question either, because it's very annoying. I simply trade what I see. I don't, what can happen next week or two, I don't know that. I mean, we'll deal with it. We're just gonna take it day by day. I have everything in front of me. I can see it. Okay, let's go back here to this chart. I want to show you and I was looking at this one. This is um, a pitchfork, but it's not a regular pitchfork. It's a very advanced pitchfork. Now, what it is that's the high. This is an S&P cash index anyway. So this is the all-time high right there. And this is the low. And you draw your pitchfork. I'm going to see if I can just do this. Let me show you this way. Right there. So you take this low, connect this to this. Now, what it has, okay, now you don't know where the bottoms are and where the tops are, right? So this is just a regular fork they use. So now this one has, you can do regular different types. See, like, I don't want, leave my standard. And this one has a baselines, okay, which is your top and bottom, right? We made warning lines. See, now this is based on two standard deviation. And this one has internal lines, which I left them at 50. It gives you more. So if you don't want to leave that, you can leave it like this. I set them at 50 here. Now it has a swing parallel lines, goes like this, cuts it across. So it makes the divisions. So you have one here, and one here down there. So you have these ones, and this one is that connects right there. As you can just the Hagopian lines, they call it. Can extend it, put a lock on it, and I can set this thing up more, but this is fine the way it is. The warning lines here is so your regular fork is right there. You gotta throw over. This is where the bottom gets formed right there. Now it has another one. What happened to that one? Parallel. That one. This. This is a very good one. Now take this. Watch this. So this is the high. There was the low. That's where we put our fork, right? Pitchfork. Take this line all the way down here. Look where the bottom is. Right there. Now you take these warning lines that we did based on the two standard deviation, and then you take this one. Look where the market fund. It got up poked above it, but it reverses back up. This market is going to have a very strong resistance once it's going to come and hit this wall right there. Same way here. I don't know when it's going to hit it, but this is where the decision is going to get made. I'll tell you that for sure. So how, because these are daily charts, this is a daily chart, so each bar is for one single day. It's just a matter of 3 more days or 4 more days and we come and hit that point. I don't know where it's going to get formed. Either something happens like this, whatever happens here, but this line right there is going to come, it's going to hit this mark, not here. If this thing managed to break, whatever this thing, which I'm going to watch on a daily basis, whenever this thing is going to hit, because we need, this and this is connected, right? Because we have two here. Now we have to see when is this Second one is gonna pop right there. It's the price gonna hit this wall. Okay, so I don't know when it's gonna happen, but it will. Which I'm gonna, this is what I watch every single day. So either we get another day like this, another day like this. We don't know that. Okay, all of these daily candles will appear. But as long as the mean reversions are signals are in and the market is trying to make a move, we should have this much upside. So this kind of a upside, if we draw them on a scale, will put you at where? 55-ish, 56 kind of range. You see? On the right scale that you see, it depends. Like I don't know how much I drag them down, but any if I take a start from here as of close of yesterday, okay, that gives me a rate of 56 on the right scale. Look right there. On the right scale, it says 56, right? So more and more the time is gonna pass, okay, because the line is not straight because you know it's kind of declining to the downside. So the number will come back down like this. You see, eventually it's gonna hit the number. So the zone that I just built it for you here is the same thing what you see in here. So this is how I see any upside the market has from here moving forward is gonna be toward this zone. That's where we have a stack of fibs sitting here as well, which is this 5451 to 5600. So roughly it's 150 points. So 150 points zone to the upside. Closing prices of yesterday, which is 53.63. So there is, I don't know, from here to here is 2%. This one is 2.7. I mean, extreme would be a 4.6. Okay. So any upside from here depends if we have one or two sessions here kind of to the downside, then we're going to make our way up, but it doesn't matter. So there's different ways that you could possibly look for either a fork is going to do it for you and fibs can pick up a bottom for you and there's many ways that you can analyze a price. Okay, back to this. What's the chart I want to show you? Now pay attention to this one. It's a good one. Watch what this market is doing. I spent a lot of time looking at this thing this week. Okay. Look what this market is actually doing this week. The overall. Here we had, this is COVID drop. Okay. This is when Trump was the president that COVID happened. That was a 35% drop. From peak to trough was 35%. Fed came, stimulus and all that kind of stuff, blah, 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 whatever you want to say. Okay, fine. Would simply focus on price. Okay, we're not talking about policies. We're not talking about this and that. We're just focus on price because I'm a technician. I trade price. Okay, everything else comes after that. So here's a drop of 35%, which I wrote him at Trump 1.0. Fed came, he was in the office until here. Okay, that's when Biden came, right? Remember, we elect president on January 20th. So here's a January 20th weekly bar. Okay, that's when Biden came. So the Biden came, market rallied. Okay, 41, sorry, for not from here. So this is the Biden run from here, all the way up till here. Then he had a bear market in his term of 27.4% decline, which is this October 2022 low. Okay. Trump left, rally, he reversed the market all the way back up, and he left the office. Biden came, bear market started here after this long, okay, which took a long time. So it had quite a bit of an upside. So basically, if you look at the price from here, literally give back everything, right? Now, watch what then from here until here, it is when Biden left the office. That's when Trump came. Now, Trump came and he managed to, this is the 4 weeks that he spent up there to the top. And then the market took a dive lower. So, what does that tell you? Now, watch this. You take this high, you take this low, 200% projection at 45.95 bear market. Now, you take this high to this low, 200% to the penny bear market. What do you think is doing market here? Is it repeating the same cycle right in front of you? Take this high and this low, 200% bear market. Take this high and this low, 200% bear market. I'm a 100% buyer in this market on any dip. Now, how is this thing is going? 35% drop, 27% drop, and 21% drop. These drops are getting smaller and smaller, and range is not getting bigger than the previous one. That tells you what? The trend continues to the upside. If you have a drop that will happen, is gonna, I don't know, it can. If it happens more than your previous ones, that's when your cycle is gonna get changed. And you have a bigger percentage drop to the downside. That's not the case here. The Biden from here, that's his run. And he left here. Trump came right to that 200% fib. Okay. Economy was fine. The only thing, what was here? Higher rate and inflation, right? And then from here, inflation kind of starting to cool off over time. AI boom. There we go. This market is exactly doing what it's been doing for the last 4 years since COVID lows. This is to the penny. The all-time high is 61.47, 200% is 61.45. It took me a while to figure this thing out, to be honest. If I would have this chart, okay, 2 months or 3 months ago, I would have killed this thing. I swear to God. I'm just I just I just didn't figure this thing out earlier. You know? It takes time for me to analyze price, but when I go deep, I'll go deep really in to see what market is actually doing. I don't care about any labeling and all that kind of stuff. I just want to see the time, what administration to a second administration, how the price went from where to where it turned back down from there. It's a simple thing. Look at this high. Actually 200% right there. You don't break 200 that easily. 200% fib or 261.8. Okay. These comes after 61.8 or 0.16 0.618. That's what you always thought about 3 versus 1. These are very strong fibs. I know that. You don't slice through them before any sort of a setback. Now, this is the weekly time frame. Keep that thing in mind. This is not something that this is This is all 4 years of price action here. This is all 4 years. So it's a very long time. But the point is not about making a time here. The point about is what the market is doing. The market is actually putting itself into a bear market territory from the last since the COVID lows. Now, if you want to sit here and make the case of a recession is looming and this recession is priced in here. Okay, now let's see. Now I'm going to show you the bottoms, where the market is forming the bottom. Okay, so we have a high here. Okay, so that's the peak. That's the trough, right? 35% drop. Now, if you take this high to this, and then you take this high to this, it's the same thing. All it is basically the price is made, the market crashed, recovered, consolidated here, of course, because it's taken out this high here, because yeah, that's what you had a huge drawdown. So it's going to be a lot of liquid. That's your liquidity zone here. You sweep through it, and then you have this move all the way back up here. I mean, there's a lot of dips here. It's not just all in one straight line. There's a lot. You see, there's a plenty of weak down weeks as well. It just came right to this 200% mark. It managed to stay up. How many? See how many times it hesitated. It just sold off here, back up, sold off here, went right back up. It's trying to see if it continues that trend. It will not. It will not at 200%. It's gonna take a setback. I know that. And you know, the only thing that I mastered in trading is fibs. You cannot beat me with fibs. I can tell you that for sure. Nobody can. This price is just it started a bear market over time. I mean, it took a long time to complete. Then we had a 27% drawdown. And then from here, so basically what happened here now, how does this recovery happen over time? There was the V here because of the Fed stimulus and all that stuff, right? This is the U here. So this is the V. So now the question comes in, do we make a V or do we make another U? Because we're doing exactly the same thing. I don't need a 30-day, a 30 or 1929 chart. Don't give me the bullshit. I don't, that's just pointless to compare a black and white picture with a 60, $100 trillion market. There's no comparison. The point is from now from me is what I'm thinking is like, do we make a V if he's going to push this market up? Or if the market just going to take a slow growth, take this round to what he did, what happened here. Now it makes sense now to me by looking at this chart. First of all, he's coming in with his administration into the market, which is extremely at the top. So very expensive market for him to take over at this bar right there with the time near the 200. So this at some point it does make sense. Now I have that 200% sitting there. At the same time, he's trying to shake things out, trying to push everything down. Say like, okay, well, how much you think that he just comes in and nobody knows his policies? Okay, what his plan is and what so he is going to pump the market. How the market is so much stretched to the upside. He left. He left. See, the thing is this: when this happened, he left here. Okay, so everybody kind of went through like, okay, fine. The crash happened. Fed came, stimulus and all that kind of stuff. And then people who lost the money in their 401k recovered and he left the office here. So in his hand, okay, because this thing doesn't happen that time, it was a blank chart. He left the market here. So he didn't leave the market here. He left him here. So he handed the stock market to Biden in a very good shape as well. Like, okay, fine, I messed up, okay, with the COVID or whatever happened, but I just, market boost right back up by the time I'm leaving the office. So he left. So from there, because the crash already happened and the Fed was already in there with the lower rates, this and that, and then after that, slowly but Biden managed to make this move to the upside, all the way back to this 200 mark. So because there's more room to run to the upside off the highs, because we have 61.8 and then we have 200%. So he managed to rally that. And then after that, when the inflation kicked in with the higher rates, everything got faded, which just basically came right back here. So anything that he achieved while he took office, he gave everything back. And then from there, over time, so the U shape happened, and then he left, and then he left him here. So he doesn't have much room to run because of this. Now that he just starts shaking things out. So now the point is this. What has happened 2 times in a row, it has a very good probability it will happen again. That's how I see it. Okay. Now, I don't want to sound like super bullish, whatever. I'm bullish. Okay. And I'm going to stay bullish and I'm going to buy the dip. It makes a lot of sense what is happening by looking at this chart alone. I'm not comparing 10 years, I'm not comparing 15 years or whatever. What I'm focused on is a simply price what is happening in the last 5, 6 years. It's more than enough data for me to analyze a price, to see which direction that that we're heading. The point is, can we come back down and retest? Fine, we can. That's just not the point. The point is that this market is exactly repeating patterns side by side. Bear market, bear market, bear market. Anytime you're going to hit a 20 threshold, you're going to hit a bear market. So can this week now the question is, if we take this high to this low, that give us 200%. Now if we take this high of this low of the 2022 bear market, give us this 200%. Now if I take this high to the current low, the 200% sitting at 74.59 to be exact, is gonna go there. It's just a matter of, are we gonna set up another low? That's fine, but that number will come off. And the only thing that we're gonna watch in the coming weeks is, are we gonna do this or are we gonna do this? If you notice that I'm showing you all this as well. Are we gonna make a U shape or are we gonna make a V shape? I don't tell too much stuff on a Twitter to people. I don't. I don't need to. I'm looking at that chart. I did this one when I was making that chart. But that one has a lot more info compared to this one because I want to show this thing to the world. We just keep it to ourselves. So here's your V shape. Same U. So now the question is, do we make a U or do we make a round bottom? I'm not talking about a low. My focus is not on a low. Focus is on a pattern that are we going to repeat this thing. been showing this. Look, 1.0, 2.0. This guy is gonna pump the market. I don't blame that. I don't. I mean, me personally looking at this is one of the best chart, to be honest, that I'm gonna track it from here anyways. But what this market is actually doing is just it's literally repeating exactly the same thing from the last couple of years. So if you take this high, because this is the high that got, because you focus on just the bear market peak and trough. So if you take this high to this low, that's what it got. You consolidated here for several weeks, over 2 months or so. If you connect this high to this high right there, the peak of this bear market, which is 41%. Now, if you take this high to the all-time high, is 27.5%. Okay. So from if I take this number, all-time high, project the upside back toward that 200 mark, gives me 21. Why the thing is this, that this is the only thing. This number right there is smaller than the previous ones. Okay. If this is the case, okay, either I go with this by keeping them in a fourth wave, or I go with this, you know? Either way is fine. We talked about this thing last week as well. So it really doesn't matter. If you go, if we put a 5 completed waves off the low of this bear of this 2022, I'm not talking about COVID low. It's already far back there. So if we count 5 waves here, it's completed 5 wave, a three wave drop. And then from here, I mean that drop can come back down one more time. That's not, it can happen, it might not happen. Okay. So from here, if we make a case from 2 to 3, works. Second one, if we'll make a case from 4 to 5, that works as well. Okay. I mean, the the fourth view is a little bit gonna be bigger. I mean, it's not. I mean, time like the direction is so steep on that one, but it's valid as long as it stays above 50% mark, and it is, as you can see it. So we just take 1, 2, 3 versus 1, which is 261.8. Remember, we're just talking about 200%. This one is 261.8. That's exact. Like, look where the market just backed off. You don't it's very hard to break this fib without any sort of a setback. I was not, well, I don't think that anybody would. Nobody was expecting the thing's gonna get shaken out and that we're gonna have such a sharp drop like this. I was under the impression thinking like, okay, fine, we have 1, 2, 3 versus 1. If I stick with this one, you know, we should be just simply go kind of like sideways like this. That's what originally what my plan was. Okay, fine, we got the initial drop, we just probably should just consolidate, buy some time into his new administration, okay, with his new policies, and then from there we can just see if we can get this move back up. But that didn't happen. We got a sharp move to the downside, okay, because of the spike in volatility. The volatility has been dead, okay, from the last 2 years. Market, but the volatility hasn't done anything, which we all know that. This chart makes so much sense to me from the last couple days. Kind of like kicking myself, like why I just couldn't figure this thing out earlier. Here we had no volatility, few dips, just a steady run. Volatility wasn't hardly ever priced into the market. all the volatility from this 2 year run got priced back here. It put you right back toward this COVID levels. So this is why all of your indicators that we just looked at, the RSI and stuff and all the other ones, they're all hitting the low of the COVID low. So if he's gonna buy time, if he's gonna buy time with his new, because he just got elected a little over 3 months now or so that he's in January 20th. So this is what, April. So has a long way to go. So the worst case is that if we do manage to go in X and do this, take another low here, this decline right there should stay smaller than 27.44 27.54%. Okay. So I see it. If you are sitting and under the impression thinking that we're doing this, well, that's the long way to go. And I don't think that Trump is going to let this thing happen. Okay. I just don't see it. That guy is watching the market and he's gonna pump the market. I don't want to be I'm bullish, but at the same time, I'm looking at his timing based on this chart just makes so much sense. He's coming in at everything is at the extreme. You know, all of this AI run that we just had with the NVIDIA and everything is just, I mean, wow, what else he could do? Job market is really good. Okay, when he left. So now what he's trying to do is what? He probably came in thinking like, okay, well, the job market is already, like, the employment rate is, where, in which sector I could build jobs. That's why he's hitting this manufacturing sector so damn hard. He's say like, okay, come here, I'll give you a tax break, make it here. His focus is on this. At the same time, yeah, you got the robots and all that kind of stuff. Well, not every company can invest money in robot. His main focus, okay, is on manufacturing. He wants these companies to come back here. This is where he wants to create a job because he doesn't have. He took over a very expensive stock market with his timing. At the same time, you people expect this to happen in the next 4 years. No, it does make sense now because the drop here, Biden drop in the 4 years, he had this drop here in his term. You see what the market is doing, it's just repeating the same drop in each term. You have a bear market in every presidential cycle. He had one before, Biden had one, now he got another one. It just keeps repeating. I hope you get my point. I mean, if you look at this high and look at this fib, look at these two prints. Talk about fibs don't work. Anything happens here, fine. I'm gonna ride this sucker all the way up till here. That's my target right there. I mean, it could take 3 years. It could take 4 years. I don't care. That's my target right there. I don't care about any wave counts and anything like this. Just my simple weekly chart. I'm gonna track. As a matter of fact, yeah, this is why I left a line here. That's the Biden line. That's the Biden term. from here to here. That's January 20th to January 20th. So now from here, I'm going to strike this. Either we do a V, either we go like this, either we just chop around here, stay up in a Y, whatever happens here. Okay. That's not my point. My focus is only on fibs and percentage range. The upside door, the golden gate, you want to call it. If here's this golden age, okay, that's the print. You're going to crack this. That's where you're going to go. That's your 78.6. And every time when you come back up toward this, it's going to be not going to be that easy to crack. That's the door. This golden age, golden gate, you want to call it, is going to rip the price back there in the coming years. It's going to take a long time, no? Because this is a weekly chart. So don't get super excited. It's going to happen next 6 months. The time doesn't even add up because take 6 months is what? Add those weekly weeks into it. I would put a Trump target of 2.0 right here. Because what I see is what has happened here before has a very, very high probability is going to happen again.
So Mo, can I add one more riddle?
Mm,
So the midterm election year during Biden presidency, it was 2022, and we had the bear market.
yeah.
Usually, the midterm election year, prices go down until October. That is a pretty much proven presidential, election cycle. So how is the 2026 midterm election year going to, play out?
You kind of have, I mean, looking at a percentage decline. I mean, we're not out of the woods yet, as you know, because our swings are down, right? In order for us to project any upside, as I said, is 58.66 is a number. Okay, as long as the low holds. How many weeks that is gonna take now that either we're gonna go through all the data, the earnings, and all that kind of stuff. That's what I'm trying to make a case here to see if are we gonna do this or are we gonna do this. Okay, so I had him as a V for now. And if we're going to give him a time like this, okay, that's a different thing. If that's the case, then we just gotta have to put ourselves here into some sort of a fourth wave to chew more time, go sideways. But as long as this 50% retracement, which is okay, 50%, that's the typical downside retracement for 4 versus 3. So what can happen 6 months? Well, nobody knows that. I mean, how people is gonna vote and if he's gonna lose the house, because you have to look at this way that I think that by that time he's going to make things, he's gonna fix these things so he won't lose the midterm. So he can keep the control of the House and the Senate. He's gonna piss people off by tanking the market. That's when people's going to start rallying over the weekend. He has Ted Cruz said the same thing as well. If consumer prices is going to spike up huge, he's going to lose the house, which 100% people are going to be mad. It's like, because people are already regretting now that we didn't vote for this. Well, some people who understand thinking like, yes, he has a policy, he has this and this. I don't blame him that he's coming here. He doesn't have much room to run to the upside. AI boom is cooling off. The companies are making investments. Microsoft is pulling itself back. It's like, screw it. We don't want to spend that much money building these data warehouses. They're scaling back. He is trying to bring Oracle and all the other companies and stuff to start spending money here, thinking like, well, those companies are going to get built in a matter of a year or something. He has to expedite those very quick. Well, he has the power, he can. Because some states, they have different laws. Some state can take months, even years to give you those commercial permits. You have to do all those surveys and stuff, and it's crazy the amount of the information you have to lay it out to the county and stuff, where you want to do it, what kind of a tax breaks you're gonna get, that kind of a stuff. You're trying to build, like, I mean, city has codes and stuff, like the location, the survey. I mean, it takes time. It's a long, lengthy process. What kind of a benefit the state is going to give you on top of it? What kind of a tax cuts you're going to get by building these kind of or unless you want to build them in a desert, that's a different thing. Then go buy land in Las Vegas or something. Just build them over there on a desert. You have nothing to worry about. Let that thing run over there. But if you want to come into a different state, like each state has to fight back, saying like, yeah, come and build stuff in our state. But some of them are just moving on. Look at Tesla. Tesla was in what, California, now moved to Texas. They don't want to put up with this because these states will allow you to come here to build stuff, and then on top of it, they're going to hit you hard with taxes. You know, still take state of Illinois. You can Google. It's the worst state to open a business. They'll tax the hell out of you here. you know so these bigger companies, what they're looking for tax cuts. So like, we're gonna make if we're gonna make money, if we're gonna pay everything in taxes, what are we gonna make? So he's telling everyone, so like, okay, fine, you come here, build it, I'll give you a tax break, you're not gonna have no tariffs. So he's playing that policy. His policy does make sense, but at the same time, but you have to look at this way, that if you're trying to level the playing field, you're not going to be have a win-win across the board. You're going to have to lose somewhere. So yeah, tariff is going to be a tax on people because the price is going to, they just simply pass them over to people. Okay, well, I paid more to bring the phone here, whatever the stuff. Now you're going to pay more. People's like, what the hell? 2 months ago, same thing was selling for $5. Now I got to pay $7 for it. Same thing. Well, the person paid more who brought it to you. Now you're standing at the store. What are you gonna do? You're not gonna buy it. Well, you have no choice. He's trying to shake things out on a purpose. It makes sense from here, but from based on a time, like, look where the market came back, retest this high, and is trying to bounce this week. Well, I don't know what is going to happen next coming weeks, but just look at what is going on here. Look what happened here. And as a matter of fact, I'll show you exact. Look at this. Got too many. I think it was. I think I had 50 here. Yeah, there you go. 50. That's what I'm saying. I mean, I don't know your approach. If I take this high, all-time high, to this bear market low, there you go. There you go. 50%. 48.19. We put a low at 48.35. You're not gonna. Sometimes you can hit them at the penny. Sometimes you don't. This could change our lives if this somehow play out. This just. Yeah, I mean, this is market is just literally repeating the same pattern all over again. Bear market rallied to 200%, down to 50%, was 3505. Huge move up to 200%, down here to 50%, 4819. There you go. Last time we made a U shape. Now that's the only question that we have. Are we going to do a V or U? To me, I think we'll do a U. Why? Because he's a new president coming in with all the policies and everything is going to take effect time. He can buy he can buy time in the market, and then the market will starting to go up from here. That's my target right there. I'll put target. That's my 2.0 target on him from here to here. He's gonna pump the market. I wouldn't deny that. I'm a buyer on the dip. 100% I'm a buyer on dips. I don't know. My gut tells me that a recession is priced in here at that 48 and 48 level. I don't know why. It's still got a lot of time. We just got to be super patient. That's it. Ignore this day-to-day noise. Focus on this chart. This is a very good chart. What this market is doing is just amazing. Just focus on 4, 5, 6 years, more than enough to make for the year. I mean, we're 4 months into it. We still got a long way to go. By the by, there's always says when everybody is bullish, sorry, bearish, is when you start thinking about. Is exactly what I did here. A lot of you guys been with me for a long time. You know that. That's the same that 2022, when I laid out this. Remember the leading diagonal sucker rally here, and then you got the initial down here, and then ever since we made a move back up. Yeah, it was a 3 wave decline after 5 waves up. So I don't had that chart that time, but it's just simply a 5 wave move. You have a 3 wave decline. So if you have a 5 wave move here, 3 decline here, you're gonna have another 5 wave to the upside anyways. So right now, this thing is labeled like this: 1, 2, 3, 4, and 5. So after every 5 waves, what you get? You get another 3 wave decline. So that 3 wave decline, if this is W, could be an X, it could be a Y. It could be just come back down here one more time, whatever the case is. This number right there, this 4,800 number, is where the recession is priced in. The stocks which are down almost 45, 50% off the highs, like Nvidia, my Meta, and all that stuff. Yeah, what are you looking for? 100% decline on the stock? Based on what? Their business is fine. It's just the overall drag on the Mag 7 that just pushing everything down. But the thing is this: anybody who's gonna try to buy something deep, low, oh, that's just not cheap enough. Like, well, how do you know where the price is gonna come down to, anyways? You buy, you you know, I, every every time I open a position, I always feel good about it. You should feel good about it. It's how you trust to your analysis, your work. You have to believe what you do. Your neighbor is not going to tell you, or a guy sitting on what does he know? Where are we going to bottom? He's just throwing out there. And there are people sitting like, oh, we're going to come down here. We're going to go here. We're going to come down here. Then we're going to go here. Like, how do you know this? These are the things that just I get to hear all the time. Oh, are we going to 4,000? People commenting me on a Twitter. Are we going to 4,000? And then we're going to go like this. Based on what? That's all the talk out there right now. Everybody's trying to just grab, they call the same thing, grab a spaghettis and throw them on a wall and see how many they're gonna stick. They're all gonna fail. Nobody knows these things. Neither do I. But I'm gonna figure it out. That's what I'm good at. But it's gonna take time, but I need to put a bunch of things together. This is I if I wish I had this chart a couple months ago. If I knew this thing was coming here toward this 200, ugh, I will start lighten up quite a bit of things. Yes, they're smart. You should. Remember, I always said you gotta buy something small on a big down day. Buy something, but buy something small before the close. It's worth it. You don't have to open See, the thing is this: the most difficult part, okay, is this. Most people are married to options, and which I understand. And some people who don't have enough capital, okay, they just say like, well, I don't know if I'm paying the right price now by putting my money to work when there's so much fear, so much uncertainty. Like you can just name anything, right? Like I don't know, like if I be able to put this much cash to work here now, or if the market is gonna come down, I'm gonna lose more. But the problem, the biggest challenge with option is that when option volatility spikes, it becomes so damn expensive. The spreads doesn't make any sense. Okay, you paying $1,000 for a spread to make 700 bucks. That's your reward. Your max loss is 1,000. Your max reward is 700 bucks. What kind of a risk reward is that? First of all, you know. And at the same time, when you say like, well, I want to buy something when the volatility, implied volatility is sitting almost at 100% peak. So you say like, well, no, I'm going to go buy all the way into December or January, going to buy myself a leap. So now you're buying yourself leap. Now you know that on a fact that you paying a full premium for the price. So what happens after that when the volatility comes off? The Vega that was fully priced into those premiums, they're going to come off. They're going to have that much. Even the fact the price does manage to go up, well, you're not seeing enough gains now because you paid a high ticket. Vega hurts premiums. So that makes the most difficult decision in the market. Like, how should I buy a weakness in the market now? Because premium is so damn expensive. Yeah, the market does look attractive. Market should look attractive if it's going to be down 20%. What's going to be down 25? Okay, well, the last time it went up 27. What is another 7%? It can happen in 2 sessions, the way market is moving these days. Market is moving almost what 4% in one day. Indicators are hitting all-time low reading. I mean, this is the time to buy. The bounce and that, yeah, I'm trying. I mean, I've tried a few times. I mean, yeah, it's kind of playing out, but it's okay. Yeah, I mean, what we lost, we lost. That doesn't mean that next 10 trade is going to be the same trade. It's going to be the same way. I can run 20 straight winners in a row. Some of you guys know, some of you probably don't know. This is how I am. I can run 18, 19 straight winners in a row. No loss, straight run. I've done it so many times. January, I had what 17 trades, all straight winners, 17, or one after another. I've done it so many times over my career. I can run 20. The longest trade I've ever ran before was 36 trades in one row. I remember that month. I did 36 trades that month, zero loss. Every single one of them was a winner. That was my highest number of a winning streak. I think with you guys, I've done like 17, 18. I've had a couple months before that I had to go back and look. kind of stuck. You kind of stuck. You just gotta go through it. Then you're gonna find plenty of winners. I'm not worried about that. I'll find plenty of trades. That's not the point. My the challenge is S&P. I need to know where S&P is going. If this is the rotation and everything is just moving based off this sucker right there, But this is the one that's always, my eyes are always on this more than anything else. That drives the market. You don't know where S&P is going. You're not gonna your stock returns are all based on the large cap anyways. What do you think your stock is gonna move on its own? This is gonna drive the sectors. Your stocks are in those sectors that you're buying, industrial, whatever that you wanted to get, healthcare or whatever you wanted to invest. Look at energy. He destroyed energy big time. It's the number one. Remember what he said? When Russia and Ukraine war will stop, energy will come down. What he did, he put a ceasefire. Look how the energy reacted. He's giving you some signs, but some people are not paying too much attention to it. He has a strategy that he does have a plan, but he's not laying out there. I remember that. He said that I had no inflation when he left here. Biden was all about spending money because the money got all printed here. Okay. So he took over here when people were dying. A lot of people got, they died because of COVID. How many people have lost their jobs? So he did manage to recover everything, from Fed, but then he left him the stock market on a very high note that time as well. So he came, he started putting, all the people, everybody was wearing masks here, remember? And then all the jobs that were lost here during the COVID time started to recover here. It's all the money that he printed. This chart gives me so much information. All the money that he printed here, which was at the printing press started here, because that's what the Fed came to rescue. So he came, okay, so all the PPI loan and all those small businesses loans, the forgiven loans and stuff, they were all tied up here. So the money started printing here. He came. That's all the money flow caused the inflation, trying to go back up. That threw the market back into a bear market after this 200, to get to this 200% mark. Higher rates, inflation came. Inflation, now Fed is trying to fight this inflation back. They didn't realize the thing is going to spike back up to 7, 8, 9%. And that's all about CPI prints left and right. Everybody's chasing those CPI days. Those was over. Inflation is trying to come back down. That time, what all the market did, I just made is U-shaped recovery. So U-shaped recovery, after that's when the AI boom came into a play. That's how he got to boost the market up. Inflation over time died, okay? And there he left the office on a very high stock market to this 200% number again. How much he's going to push the market up? Not that much. It does make a lot of sense though. He's coming in when everything is so elevated, so expensive. Market was trading 20 times earnings. What he's gonna push the market up to? This drop makes so much sense. Then he started this thing. He's making these countries now to spend money. It's just like that's it. We're not his thing is I'm not gonna babysit nobody. America comes first. Our people comes first. And he's after everybody with a baseball bat. That's it. He doesn't care. He literally says to NATO, you're not going to spend money or you're going to match us. We don't want to be in NATO. Europe turned around, spent passed the largest military spending bill because of this. They're scared. United States will back off. They didn't do this. They didn't pass that kind of a military budget with freaking Biden and Obama and all the other ones. He's making these country to spend money. So you're not gonna do it. I'm not gonna do it for you. That's it. Enough with the babysitting. I'm not sounding like, well, I favor him. I am a trader. I look for opportunities in the market to make money for everyone. Okay. My number one focus is price. I trade price. This is why I learn fibs, because fibs is the price. It gives you a great zone that you can build, that you can potentially find trades, that you can find support, that you could buy something. And it gives you a really nice upside projections where you can expect the price will make a turn down, will back off. Or if we manage to break above, then we can look for, we have our extensions. We have our retracements, we have our fib extensions. So these are the only two ways that I look at the price. What will happen Monday? I don't know. What will happen in June, July, midterm, 2 months from 2 years from now? There is not a single person on this planet will know. We just look. This is that my approach is I look at the chart. I just see how things are going to play out. Sometimes it does make a lot of sense because moving moving price actions every single day and sitting and assuming is different than just leaving the things the way they are once you make them and just wait for it and see what happens. But this day-to-day approach, like, oh, I want to wake up, turn the computer on, wait for the 8:30 bell, find a trade, make money, and call the day off. Well, it happens. Sometimes it don't happen. Well, that's the way it goes. Some just I totally get it. Like some trades takes time, and some will just instantly pay you, and some will come and bite you. That's how I see it. Like which way is gonna go? Like, I mean, I'm just like looking at my look. I was just looking at him like, look at this chart. I put an ABC here or WXY. It really doesn't matter. Okay, I don't even want to do it. So when you go on a bigger time frame, it gives you a one daily bar. When you go to a smaller time frame, then you're trying to fight your life over like, oh, should I look for a three-way subdivision? Should I look for a 5 waves down or whatever the case is? The thing is like, just look at here, 48.39. Look at this. I mean, I'm not saying that or sitting and bragging about, oh, how great I am and this and that. But if you just simply leave things sometimes the way they are, and you just like, okay, I know what my zone is. Well, it could be 46.40, or it could be right in the middle. That's just not the point. The point is like, I have my zone. This is where I see the turning point. Now it could be 38.39, it could be 46, it could be 44, 45. That's not the point. The yellow zone is what it is. We're looking for a cluster of fibs. We highlight that area to see when the price does come toward that zone, what happens there? Because some of these are very strong fib. This is 200% here. There is not a chance that this market comes back down, hit this number right there, and it's not gonna bounce. You just, we're talking about a same 200 that is literally peaked the market over the years. So you're not gonna slice through 200 that easily. I can tell you that. It's a very strong fib after this one, 161.8. This is the one that everybody's, look right there. This is the one that everybody is looking after. The green ones. The green fibs are the ones that you always have to pay attention to. They're colored for a reason. Any green fib is on the upside or to the downside. You always got to watch this one. And 78.6. Elliott wave, the golden ratio on every book is 161.8. So we'll see what happens. I mean, I have a very good idea, but it's gonna take time. It's too early because with this guy, and I'm not saying like I wanna go hug him. I mean, the dude is still ruthless, but things what he's doing and what he's capable of, it's gonna be fine. You know, at the same time, if he's laying everything out as a transition that is going to play over time and is going to take some time, that he's trying to reset his policies, trying to spend, making these countries to treat us fairly. If he can get to that table with the negotiation part, I think, yeah, the price will go up and this and this, but at the same time, if inflation is and CPI prices are coming up, it doesn't mean they cannot go back up. Of course it can. Anything can move around, turn around. It's just like if we do hit a recession, okay, that will be that I would call that will be the first man-made recession in our history. Okay. If it's all about financing a debt that we're in, that we just gotta have to shake things out, and then we can just finance that thing with the lower rate. That does will help, but it's all about the damn timing. It's all about damn timing. People got hurt. People got hurt here as well, and people got hurt here as well. People here lost their lives. That's the worst compared to this one. If you have to look at it this way, I don't have any family member who died, but I'm just overall, I'm pretty sure that I don't know the real numbers, but I'm pretty sure that you probably heard somebody that somebody got hit with COVID, that somebody passed away. That's just not a good way to look at this. This is what people were dying in this situation. We'll overcome this. I have no doubt. Yeah, the damage which is done. I mean, the volatility which spiked to 50, 60 is going to go back there again one time as well. This is not the first time or the last time either. Volatility comes and goes. I've seen so many times. I mean, if we were trading here, we were trading here, and we just traded here. Rest of them is just the big run over time. Yeah, a lot of choppy weeks. You got. It's not like the everything is a drawdown. Like there's a lot of 5 and 10% dips here as well. This is 10% dip right there. So 5-10% dips here. But if you look at, that's how I see it. AI, I don't know if you can make the case. I don't know if he's pushing. But you see, the thing is this: what China did with the AI, and then he realized that. we're actually spending a lot more on the AI, right? Compared to they have the cheaper version over there, this and that, And he didn't really budge. And he says, like, okay, fine. If the price is lower, then we'll just pay a lower price. We don't have to spend that much if it's not necessary. Because the thing is this, you can inflate these numbers any way you want it. So anything here in the United States is going to cost a lot more than what it's going to cost in China. I'm not saying China is a cheap country, but I'm just like, building stuff here, the cost and everything is crazy compared over there. So I don't that there's gonna be a next boom. It's very hard. His main focus is manufacturing, as you notice. He wants companies to come back because the thing is this: he had a disaster when he left. He came, clean it up with the money which was printing all the way back up here. He got hit with the inflation, and then from inflation, Fed start fighting this inflation. I'm bet you there are thousands of guys were calling this the market top that time as well. You all know that, okay? Nobody is happy with any tops and any bottom, regardless. Okay, it doesn't matter. That's totally relevant. Like everybody was sitting over there calling everything. Right now, I bet you that half of the Twitter right now is sitting like this. This is the 15-year or 30 years or a century's top is in. That's what it is. Because that's what the fear does. That whoever is long is like, oh shoot, we're gonna crash hard. It's just like it's hitting your head left and right because you're looking at one guy showing this, other guy showing this, other guy showing that, like 4 or 5 different people telling you the same thing. Who do you trust? The point is this that the point is this: if the market is down 20%, what do you think that will how much more it can go down? Just ask yourself this question. Then you go back to a previous decline was this. Now you had this. So what do you think is going to happen? Another 5%. So if you suffered and managed to took it like right on your chin, but you cannot handle another 5% down. I can. What is another 5%? Tell me. Nothing. That really going to push the bottom in if it's going to go that way. But now the question is that if you the people are like, oh, in 1929, in a Great Depression, in a Great Depression, market had a top right there. We went to a 1929 crash. And then from 1929 crash, it took us 22 years for this market to rebound. Are you really? I mean, does it even make sense? The world that we're living in right now, you comparing today's world with 1929, and you making a case it's going to take us, what, 22 years from 20,025 plus 20, so 2047. So we're going to have like what, 22 divided by 4 terms of president. We're going to take 5 president terms for us to get us out and back to the highs. I mean, I don't know. So we're just going to take us 5 years, 5 president terms Okay, because things went so bad, like the Great Depression of 1929, that it was gonna is gonna recover. We're gonna recover everything back. I mean, I don't know. I mean, some guys just have way different approach, looking at things or seeing things, but or predicting things, I guess. But this doesn't make sense. It just does not make sense to me at all. You compare today's market when there was no telephone and typewriters out there, we're just talking about stock certificates that were used to people used to buy and they hide them under their bed or put them in their locker box. Stock. You comparing today's market to stock certificate market, a black and white. There was no computers around. Everything was handwritten. Everybody was making charts by hand. And then it will take us 22 years to get out of the Great Depression because this is a Great Depression from here. Give me a break. Seriously, just give me a break. The level of money that we have, and we're gonna put the world, United States of America, into a 22-year drawdown. A guy who's the ruthless guy in the White House, who's all about wealth, okay, who's all about the stock market, is gonna do this. I don't think so. This guy is way more aggressive when it comes to a stock market than this guy. He pumped the market as well, but he pumped him in a he got that award of AI boom. That's where the market rallied. And we took full advantage of it. I'm not having no complaints of last year. I made a lot of freaking money last year. A year before was lit. This was a challenging part for me there, but we had a this run, this one by. So we had a little speed bumps here a year before because we have two deep corrections here back to back. So this was 10% here, this was 10%, and this was 10%. So this was a little bit challenging because we're coming off the low, So market is always gonna have some doubts about if the market is gonna roll right back down. Everybody was bearish here, anyways. A lot of people have missed out this run. I'm not gonna. I don't know. I mean, I've as much. The only way I can say that is because of all the level of negativity that the Twitter had on the previous 2 years, is that most people were fully bearish on the market, and they lost a lot of money. I didn't even remember buying puts here for anyone, you know, without semi and software, industrial, financial. Well, okay, let's do this. If I would show you, let's go to a rotation. Let's say which sector, look where this is a weekly rotation. Where do you see the weakness right now? XLY. Consumer discretionary sector is the one is in a lagging quadrant in the coming weeks. Top two stocks are what? Amazon and Tesla. Because of the retail side is the one is under pressure because of all the tariff talks, right? So Nike and whatever, Lulu and whatever store, that retail store you want to talk about, they're all here in XLY. So if you take tariffs and if you put consumer discretionary side right next to it, that's the sector to avoid. unless he makes the deals, which he will. It's going to take time. Well, how long it's going to take, nobody knows. Rest up is technology. XLK. XLK, which the weakness that we just had for the last couple of weeks, it's as you say, you see, it's trying to form a hook back toward the improving quadrant. That will still take several weeks. It's nothing's gonna instantly is gonna move. But you have financials that turning back down again, and you have the communication. So the market does have weakness, which we already experienced. But the thing is this, are they gonna improve? Well, we're gonna find out. But look at the other sectors where they're going. The market is so divided, you know, because you look at the energy and all the, because if you look at them, big heavy hitters, they're all here, not here. So now you say like, well, I want to go to a bigger time frame, into a monthly time frame. Okay, well, there's your monthly time frame. Financials are good. XLY is good. So it's a rotation that is playing out right now with the weekly time frame. Look where the monthly is going. But it's a long time. That keep that thing in mind. 1 month is gonna, this little hook that you're seeing right now is gonna move after a month. Daily moves all the time as soon as the market is gonna open. I mean, I look at it from here. I don't literally position myself based on, because this is a very long time horizon. People cannot hold the trade for 2 days. They got a panic attack. You think they're gonna hold the trade for 6, 7 months? I mean, just nobody have a stomach for it. Market is down on Monday. Oh, are we holding? Oh, are we selling? Or are we doing right away? 10,000 different questions. Like, what do you want? Like, it's like this all the time. Like, what do you want? Instant payout? The one on what, on the next candle? The minute you open a trade? I mean, it doesn't. It's not how things work. So if you go back to the daily time frame, that's the one that updates on a daily basis. So what do we see here? Energy is down. That's not the one to do. And he literally said it. And I've been, there's no point to be consider energy, because he said it like energy prices will come down as soon as the Russia and Ukraine war will stop. It's not fully stopped what he's doing, whatever the ceasefire he did. And look what had happened to energy. He's not going to push energy up. He has those Saudi guys playing golf with him over the weekend in Mar-a-Lago. What do you think kind of a deals that his guy is cutting with them on the side? He bringing Saudis to run tournaments in his golf course in Mar-a-Lago. What do you think he's doing? Why is he doing it? It's all politics. This guy, what he's doing, he knows everyone and everybody knows him. You need to get things done. You need to go and kiss the ring. That's the fact. You're not gonna kiss the ring. That's it. He's gonna come after you with a baseball bat. That's the way he is. There's a long way to go and deal with them in the next 40 years. It's not, I mean, we're just getting started. We're only 3 and a half months into it. We got a long way to go with him. XOK looks good. I mean, this is the one I would consider for now. Just focus on this. And I don't see anything else. Just industrial is trying to poke material, push in communication is down here. XLK is the only one that I'm seeing right now at the moment. Starting to look good. I mean, that just started to move yesterday as well. So we'll see Monday and Tuesday how how everything goes. Then if you look at them, where's my I'll show you their growth, edge growth and value. I mean, just heading northeast. I think that's what I'm saying. I think earning is going to be okay. I don't have any, see growth here, right there. You see, it's trying to move toward it because this is what the weakness is in the coming weeks. The market just had a drawdown. What do you think is going to happen from here? I know it's going to take time. This is per week based on this is on a daily basis. Yeah, to me, um, gotta buy the dip. Just makes sense. If you want to focus on industries, I have them here. What the hell went here? If you want to focus on which industry to attack or buy or weakness, this and that, that's your picture right here. See, we got pharma, technology, hardware, consumer durables. They're all pushing here. That means they're going to turn back up, right? Remember the rotation is going to turn back up. So the semiconductors are the one you see that's trying to make a move right there, semis. So semi is going to be okay on earnings. You see the rotation is just getting out. These are all the industries right there. I have a full list here. Oops, here right there. So you have telecommunication, food and beverage, healthcare, insurance, food, commercial utilities, household items, diversified financials, materials, capital. So I pull the data. These are you're not gonna put these codes in a Thinkorswim. Energy, software, banks, transportation, retail, semiconductor, technology, consumer. So all of these the industries are all here. So if you're looking for a sub industry, you see like okay, which industry will starting to rotate out, then you take that, then you have to go into those stocks to see which stock are the leaders of that industry and to see like the bigger names we're talking about, the ones with the biggest market cap. The market cap, then you have to look at well how the chart looks like on that based on the industry that you want to spend money on. So if his focus is on retailing, see his style is here. See, transportation is weak, banks industry is weak, composite, this. So some of these names here that come in. So basically, if you notice, this is nothing coming out. That's what you focus on, not that something pushing here. That is going to take time to make the rotation back up. What you need to focus on is what is coming out of here. That is the one that is actually forming a hook that is going to improve in the coming days. It's the semis. So this is why I showed you this. Oops. This NVIDIA. That's the leader. If the semi is going to try to make a rotation, this is what I'm trying to make a case here to see if we can get the first swing here and then we get this kind of a pullback here. By the time the rotation goes, that's the one to play. I don't have the one chart approach. I just say, oh, this is the wave counter. That's it. No, that's not how I trade. I look at several things. Why I want to invest in there. How is the sector or industry is doing compared to the benchmark? Is all here. It's moving every single day. I see them. I watch them every single day. See energy right there. No, I won't spend anything here. Diversified financial things. Some of them are there just like weakening. But the only thing this is a lot of the move has been done of last, healthcare and stuff is all here. Telecommunications. This is the one I want to focus on right now is semis. So I've been up for a while in the morning, I was working on some of these semi stocks. I was looking at QCOM, looking at Micron, start working with Nvidia and stuff to see if we can buy something on Monday. But we have earning risk as well on top of it because all these earnings are starting as well. So that's another hurdle. Opening a big size position if the stock, because stock really don't move much, because as soon as they're getting close to the earning date, so the stock really don't make the wild move because they're waiting for the earnings to come out. And then if the position really doesn't go in your favor, doesn't really move much, you're just wasting time. And then you got a full size position on, and then you stuck with the position, and there goes your earnings. Then you have to cut the position either in half. Say like, oh, I'll just roll like one or two. See like how you can just risk to play the upside. It's very difficult to open a full size position a couple days or a week before earnings. Look at yesterday. The market had a big, huge run yesterday, right? Netflix was up 1 point. I mean, that Netflix didn't move at all yesterday. Every stock was on a bit base. Apple popped yesterday. Microsoft was moving. All the other, not Microsoft. Netflix was only at 1 point. Why? Because next week Microsoft earnings are. That's exactly what I'm telling you. You have to pay attention to these things. Don't attack the stock a week before earnings and try to like, oh, I'm gonna size up this trade 2-3 grand. Why? The stock is, yeah, you can get a 10-15 point move. That doesn't, okay, if that's your trade, then that's a different way to look at it. Stock just don't instantly semi stocks. I have them here. Yeah. It's what I was this is what I've been working on this morning. You see right there, they're all here. They're just gonna make their way out. Some of them already starting to move. There's Nvidia right there. See? ASML, Applied Material, and KLA. TSM is still kind of tilt more. TXN, no. Qualcomm, yes, that's what I was looking at this morning. Oh, no, not this one, no thanks. This one is pretty beat up. This is way down. SMCI looks good. Still kind of range bound. Looks like a three-way, some sort of a 3-3-3. Doesn't have something. See, 1, 2, 3. Yeah, it's little jumpy. Um, AMD, no. I don't like this dog anyways. I was looking at this Qualcomm. This is something that I like. Something I like. This one has a false break. I'll go with this low. It's got, sometimes the wick is, you gotta pay attention. Little, it's gonna be probably a little bit higher. And you don't want to lay out a channel on the top sorry, on the bottom of the wick, because the price has it reversed. You see right there, take this one, put the low right there. Yeah, I don't even know who uses it basically. I never seen anyone. So if you put a low exact right there to this low, and then you see now it gives you the room to the downside. But that's just not the case. When you have a big wick over there, you just go where the close was, somewhere around there. So that gives you a pretty good bot. Yeah, I was looking at this Qualcomm to see if you can buy something in this 135.40 zone. You just make a room to the upside. ADI is good, doesn't have too much liquidity. SMCI we did. This stock is just $600-700 range. You see 668. I traded this one a couple months ago. That was a spread that was nice. It's not a cheap stock. Minus $650 stock. So I'll see. I'm um gonna play around. That's the one. I mean, that would be the breakout that that could play out for this trade. And just to see if we can get to this area. Oh boy, I didn't even get to 23 points. Yeah, that yeah, I would do this. I would go that crazy. Break for the 700 to 781. That's the trade on this stock. 7 7. This is 23.6. 23.6 along with the trend line. Well, that sucker has to break. If it breaks, it's not going to be instantly break because you see you got one here, one first one here. This one you have failed twice. It hasn't retested ever there. Then you got this drop here. I have to wait for this seed if the price gonna come and hit the wall. Once it's gonna break this, it has to break close above this line on an intraday basis. And then from here, you gotta look for it because there's a lot of times the price can go and hit the wall, give you a fake out. It goes here like this, and then it just goes back like this. Yeah, breakouts are very tricky. The best way, the clear breakout, I mean, the way to see it, to identify that is a breakout, is for to see if the price close, meaning the full bar, one of these or any one of these bars, that open and close above the trend line resistance. Once it does that, and then the next day or the next day, you need to see if the price comes back down to retest that breakout. Okay. And then from here, that's how you buy the breakout. You need the retest because a lot of time what happens is that the price breaks and a lot of people planning to go long because now the line, the magic line breaks all of a sudden. And then the next day, price reverses back down. You just only take one intraday close above that line. That doesn't mean anything because you need to retest it. Yeah, you gotta be pay attention to these. This is why I like channels more than the actual 1 9. Channel has a way more, much better view to it because you can expect those throwovers. You cannot expect those the just the sim by just like drawing a simple line. You see like how many lows here. So you have multiple lows to the downside, but you have no throwover to the downside, right? You have this low, you see this so many times. On the upside, you have to see, okay, that's your high. You only have one and two, three. So you call three here, four, five, so whatever you want to call it. So you have more here to the downside. So we'll see. That's the trade on a breakout. That's pending to the breakout trade. But again, it's a risk to take risk. QCOM is the one that I'm kind of interested in, and I'm watching the video for sure. Micron took a big hit as well. It's the weakest stock right now. Weekly looks good. 1 2, 1 2 count. Okay, Broadcom. I mean, both are solid companies, if you ask me. I mean, but I like Broadcom. I think this is the best. This is a stock that you could build an excellent position over time just by the dips. You know, I bought them and just gonna hold this stock. They just like stock was down. They just announced 2 billion buyback. This, I mean, it's a great company, good balance sheet, excellent earnings, and this that's the stock to be in for a long haul. And just Broadcom is a very good company. Nvidia, as always, is a poster child, of course. Everybody knows. Um, that was the we spent a lot of time here, so it makes sense, It does. It has a lot of information on this chart, to be honest. This is on a weekly basis, so we will track each week how the weekly candle goes, whatever bars goes. But weekly swings are down. So again, we will need 3 weeks of higher highs for the week to recover. I mean, I don't think that is happening anytime soon or that fast, because unless we come, crazy earnings come out, that's a different thing. But we're gonna have a lot of up and down, up and down choppy moment for sure. Yeah, volatility has to come back down to that 25-ish kind of number to market start taking a breather. The only thing I had our finger crossed, mean reversion signals. That's it. That's the only thing. So good sign, the good positive sign is that at least on Friday, as of yesterday, a swing turned up except for this one. So now we have this green zone, these green ones, except the red ones. So that's it. Let me do a scan, see if we can find some trades. I'm looking on a few things. So we need this. We can do a weekly S&P. Let's see how many stocks. What? It's an S&P 500 got hit. See if we can pick some bottoms. Oh, not bad. 111 stocks. Do this. Go to a weekly this. I would no, this one. A lot of them they got a pop yesterday as well because market rally, remember? Apple. Wow, impressive. I didn't even notice this thing yesterday. Huh. I mean, it's 110 stocks. There's a Accenture. But this is where the week just ended. Some of these stocks we can just buy dips. Adobe is one of them. ADI, that's 111 stocks. That's a lot of stocks. Here you go. AMAT, Applied Material. We just looked at the Applied Material rotation. Looks pretty good as well. So we can get some upside in this one on the semi names. Amazon making the way as well. See, there's a lot of Mag 7 stocks here. Apple, Amazon. Okay, sounds what else we can find. Arista. Some of these mean reversion definitely is gonna can pay us on some trades for sure. I don't even know what is Apollo. Avalon Bay Community. That's a real estate. I know. American Express got one. Whoa. Bank of America. Wow, these are weekly time frame, this see now you have to look at this way that it triggered here, but it didn't trigger anywhere before. Even the fact that we have that dips. Best Buy, BlackRock, Financial Caterpillar right there. Oh, you have a Caterpillar here. Carnival, the Cummins, Salesforce. That was Delta, DuPont, Dell. Some of them got a nice pop of 70 to 81. That's a 10-point move. This one was failed. Yeah, once you will have failed once, the second time it's gonna go. Just a matter of being in a trade for 2 more weeks to take the punishment. See, like this one right there. So you got 2 more weeks. You gotta suffer the price. But it goes. See, like there, this is perfect. I mean, buying a couple months of time is just a matter of waiting till a lot of some financials as well. Yeah, I got Google. It's a nice close for next week. You have to look at like some of these closes was really good yesterday. I was looking at them. Hilton, what else? Lowe's. So we have Google, we have Apple, Amazon, ServiceNow. Some failed. I mean, ServiceNow, I can catch 50 points and this stock pays really good. It's a very high beta stock. It moves pretty good. NXPI, Northern Trust. That's a lot of stocks in a hundred in Oracle, PayPal. Yes, I sent them to Ruben yesterday because he bought five call spread on this one. I was like, it's a good close. Triggered here. Tesla? No way. Wow. Interesting. Because I looked at this one 2 weeks ago. It triggered again. Tesla might be ready for a surprise. So they report, I think they're not going to report next week. They report the following week. I mean, if that's the case, I don't know how much big of a move Tesla can make before earnings. It's not going to be that attractive, anyways. This is the one I was looking at as well this morning. Wow. Texas Instruments put a double bottom here. Vistra. See, this one keep failing. Zebra, I was so bullish on this stock. Look at this, man. This is a nightmare. I was bullish on this stock as well, remember? Glad I cut that position. This is great. I still, this stock, if you look at the trend of the stock, you see all this. This is a simple zigzag position. It's a good pharmaceutical company. I mean, it's definitely much cheaper. I might just buy a couple more shares again. Last time I cut the trade. Oh boy, it doesn't go straight. This is no. Oh, because it failed that fifth, seventh swing. No wonder why. It managed to survive in a six. Oh, this, yeah, this is gonna, you're gonna go. Damn. No, I wouldn't pan. Let me see what else we can find. That's a third swing. Williams Sonoma is a good choice. And this stock's some taking some serious beating. Wow. He didn't even have a single higher weekly bar. Three, four, five, six, seven, eight. 8 weeks. So that's 2 months. And it closed the week with an inside week as well. Wow. With all the beating, the stock might take a shot at this one. We gotta hold this. Oh man, it's gonna be a wide stop, 148. No, that's a lot of weakness. But look at the upside here. One, you see right there? Remember we talked about this morning earlier? Yeah, you gotta pay attention to this one. Not here in the middle. You see something happen like this? When you have a trading range for like several days, like this, and if this pops right there, you just gotta wait for the next day because the price is literally in a in a chopping around sideways. Yeah, when you have a drawdown for this is the weekly time frame anyways. If something forms like this at the low, that's the one you gotta watch. Same thing to the upside. So no, I mean it doesn't mean it's gonna work every single time, but most of the time it does. This bar right there or candle, whatever you want to call it, does identify and put a lot of tops and bottoms, these engulfing ones. Western Digital US Bank Corp. They still have to report earnings. This should be right here at 78.6. That's the one right there. So I don't know the beta, like how much is the stock? What's the ATR on this? Yes, the was 2.8. It's tough to find. I'm not just I like I like beta stocks that actually moves. I bought him what was that? What was the trade I did? Forgot. This Mark. It's a 2 point ATR, you know? It just moved yesterday and then something to keep an eye on Tesla. Interesting. I didn't even see this one since yesterday. I run these scans over the weekend. I usually do them yesterday at the close. Tesla might be in for a pop. And some of these stocks have taken so much, a lot of financials they got hit. PNC, see microchip, this one, brutal. Very Lulu. CLS, that doesn't have that. It's not beating down. This is an eighth swing right now in the week. If I'm going to go back to a smaller time frame. Yeah, so you have eight over there, you have fourth here. So it's looking to try to make a move back toward the fifth. Okay. So Let's see what we can find. Well, there's many ways I can show you. Okay, oops, let's do this. Let's throw a weave up here. Okay, 96, 97. So that gives you almost a 95, 96 range to the upside. Oh, shoot. And then, so let's do, I don't know how much time do you have, but okay, from this low we can do, or we can just use one the previous I like to do. It's gonna go up there. So they're all gonna go up. Just the bottom floor for now. So you can do this. Your support is always going to be on your price. You gotta have to hold this low right there. So whatever you're doing on that trade, you want to make sure the price stays above this. That means you still have a long way to go, long way down. You don't want to have this fourth dip below here to this previous swing right there. So your downside is this. You take the swing high and this swing low. That's your downside. See, that's exactly where this price found the support and is trying to make a move back up. And what you can do, what else I can show you? I can show you can make a channel here. You can do that way. That's just do this. You can just draw a line, that'll be fine. You need a channel because you have the top right there. This is where the second you have the biggest drop from here, from this high. So you connect this high to this high. Now this is the air pocket that you have now for this price to make a move higher. So if the price does manage to move higher, take this thing off, the fourth swing is in. Now it closed the day. It has a huge pop. It closed the day with the outside bar yesterday. So you gotta watch Monday real close now. Okay, so let's focus on this. So we're gonna draw our fibs from here to here. And then we just do your, oh, those are way up there. Get rid of all this. We don't need this. We can do 50. So let's do that. Okay, there you go. So let's do this way. So that's your low. That's your VWAP, which is 7176 to the downside. Need to crack this line. You have a little bit of this air pocket here. And then your upside VWAP is at 9697 toward 1995 101. So that's your 5.5 points on. You see 1995 is your VWAP, 95 back to 100 is your 50% retracement. I would only focus for 90 for now, to be honest. I wouldn't write this window right there. If the price managed to right there from here to here, that's the zone you should watch right there. That would take us to a 38.2 fib with the weave up is at 96. That would confirm the breakout as well, above the line. If it's not, just that's that's the best it's gonna get for now. This is on a daily time frame, so watch Monday because Friday was the outside day for the stock. I mean, if you want to throw a 200 here, you can, which is there you go. That's right at the 200 EMA. Oh, so you gotta watch this. It's gonna be a tough one because it took the leg down. Now you see this 200 here is gonna be a strong resistance before it managed to break above this line. Then you need to crack this line and get above here. But you gotta have to, yeah, break this 200 EMA. Price is coming. So this 80 level right there for this stock is a pretty strong resistance. So you can just do 78.39, which is 23.6, like this. 78.39, that's your 200 EMA. That's your VWAP is sitting down here 71.66. So watch these two. Um, GEV. What stocks? I mean, I can make all these wave counts. To be honest, really, it's just not necessary. I can you can do the same thing on swings. Price is price. It really doesn't matter. You want to label this thing or do it this way. As a third swing down, as a failed 2 and 3. Okay, stock is definitely making lows, lower high, lower low. You need to break this swing high. Okay, so how do we break this? So we can draw a line. That's what the price is fighting right now to break this line. So we have two swing highs here. And what we can do, you can do take this swing high to this. That will give you the 78.6. Okay, we need to break this. So get rid of all this. You need to break 78.6, which is 328. 328 to 349, that's the previous swing high. Then you take this load all the way back to the highs. See where you can make your zone. Get rid of all this. So they're all gonna, so you have 38.250 and 61.8. That's good enough. So weave up 327, trend line resistance. So it hit a wall here, here, not really here, but Friday it did again. It's trying. It's gonna slice through it. So it's pretty strong rebound here as well. From this drop right there with the gap down, stock has made a very sharp reversal back to the upside. So let's just walk, keep an eye on this. Just that's your sticky zone right there for this stock. If this breakout, if you manage to break above this area here, then you can look for this 349, which is this 350, 350 for this high swing right there. So from 321 to 350, I mean, it's still quite a lot of points. MSD, I have already know, so it's just too messy right now. You have to wait. It's just I don't understand. Bitcoin moves 5,000 points. The coin in MSTR is like dead money. It's just like how do you even? I have no idea. Like Bitcoin can move overnight for like 4,000 points, and then you open up a like next morning, MSTR is up like 6 points. I mean, like, how? Yeah, 330, exactly. 330 is the pivot zone for this stock. It's just because it's the 3-year high. It's a little, the wave count really doesn't have. I'm just gonna leave it. I have 332-ish kind of entry. It just keep bouncing back and forth. Right? There's a 3-year high. There's nothing. I understand that the stock has like that's a double top here, call it a triple top, triple bottom. Like this decline right there is just so choppy. You know, that's just we just have to wait. I mean, if I want to lift this thing up from here, I mean, it is a possibility, but the thing is, like, if this is the low, we can just go like this, take this thing all the way down in A, smaller C, right there. It's a five-way move. So if we do this, you see, we got the breakout, which is fine. Now from here is going to be a steep, which is valid, is okay. You can live with it. And just put a, see, invalidation was 231, it barely 235. So, no, I mean, it managed it actually like 8.6 as well, which is 252. And I'm just watching. I'm just there's nothing really. You see, you can turn this thing, make a full bullish case, but you need a help of Bitcoin, and then on top of it, you need Sailor to can stop messing around with the stock. Because he's like keep adjusting his cost, but to the Bitcoin. So he's buying on every on all these dips, but at the same time, but I don't know, it just how are these? I'm pretty sure he's not sitting at home by himself. So he had those brokers. I don't know if they're pushing these prices down, trying to average, you know, overall cost, like how I want to do it. I don't know. If we're gonna have to make a bullish case on this one, okay, that's the way it's gonna go. And now, if this low holds, I mean. That's some crazy move to the upside. 100% measured move is 349. Just kind of just like a minimum. And then from there, we can just make more room to the upside. Very too much overlap. This definitely looks like a some sort of a fourth wave is going to take all the time in the world. You see, like you connect this, you got so many breakouts. Retest it back again. It's choppy, but I'm gonna stay bullish this stock. That is absolutely, it's gonna go from somewhere. In worst case, it takes one more leg down here, but it's gonna come back to 333 again. Watch. Just look how many times the stock is keep coming back. It was close. Pop came back. You see all these retest back and forth. Look how much time spent here. Months. 333 level. Down here. Come on, close. And another down. There you go. 333. Now back another. You see? Yeah, 333. It's just price is just trying to find his way. It's gonna go from somewhere. If this low holds at 231, I mean we're right here at 300, so it's still a long way down. So if we do this, so you'll be looking at something like this. Like this. So turn this thing into like this. It's a little tough bet to make because it's overall it's such a steep second wave, but it's valid. Don't throw the towel in the ring. Um, so from here, so you got there you go, 61.8. Now you three versus one, 344. See, 334 back to 333 again. 349 from this high, 390 from three versus one from here. So I wouldn't go that far. It's gonna go nuts. That's the area. Price trying to make a move to the upside. It looks like, I mean, I don't know. You want to connect this one, call it a, well, it poked her head out. Just a matter of now it's gonna have to continue. Could be. Could be, yeah. Could be. I mean, it's just the fourth wave, just nasty wave, man. It's so difficult to can analyze and just to fight this one, you know, it can turn into so many different ways, you know. It's against the this one. But you have to look at this. Not that bad. I mean, time-wise is okay. See, this one was near to that 38.2. See, when you take this, get out of here. You see 3 versus 1, 200. I mean, the price did went up, 100 and what, 143 points. But look what the price is doing. On a larger scale, if you have managed whatever if you had a wave count and if you managed to make a move all the way back up to 200, it's a time to exit the trade. You know, I mean, a super strong move if they have a lot of momentum or this, yeah, you can get up to 261.8, but third one is just gonna fail somewhere around here. These are just very strong fib. It starts from 200 and it just 261 is literally like, okay, time to take the price just gotta have to take a pause. You know, that's exactly what I'm seeing here as well. 3 versus 1. If we take this bear market low of 2022, see, it puts you right at 261.8. So if I take 261.8 and then we just spend all the time to figure out this at 200, yeah, makes sense. So it's just there were signs, to be honest, of a market topping out. It just didn't really. But done is done. It's okay. I played. I took one shot, if you remember, on puts. I did that one, but that one played out so fast. I wasn't really. They all three those put strikes were in the money. I was like, well, it's just almost because my downside is capped anyways. So I cashed out like I don't know what was the trade. Um, and then and then after that I was okay, and then we're just keep coming down and down and down. I was like, well, I was like the world is ending. Coin same way, nothing. What was my job here? Please, down in one. Coin got hit hard, way harder than MSTR. See failed swing here. See the coin here. Look, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 weeks. The stock has not had a higher bar. I looked at it yesterday as well. 11 weeks, look at this. Not a single higher bar. Yesterday was a pretty good close, not gonna lie, for the week. So we should be able to get a pop on coin next week. It's due for one. This is brutal beating for this stock for that long, you know? So this has a hope. So the worst case, it can go right back to 200. Um, Dude, do you have all these positions open? IBKR. Oh, the brokerage firm. All over weekly bars. 3, 6, 7. These brokerage got hit hard. So you got 3, 6, 7. You see same picture here. So you have a very strong close yesterday. Look at the massive reversal. Wow. Very strong reversal yesterday. Well, the only you're probably sitting at 38.2 now anyways, so there you go. Next upside 183, 196, right at 171. I mean, lot definitely has made a lot of room, so see if you can look for 183. That will be the next upside if you can get there. If this thing is coming down this bad, it should be pretty oversold stock, making a pretty sharp move to the upside. Coin we did, IBKR, fine. RDDT? What is it? Oh, it's Reddit. Down in P1. Oh, because it reached a potential swing. It filled that gap. There's a lot of support here for this stock. Right here. To this swing high, and this swing all the way came down here. Inda, this is I don't know if I have yeah, I don't think I have it. Inda. Oh, that's the I share of ETF of India. It's going to be due for a fifth swing to the downside. Right now, it's already waiting at 46. A pretty sharp move to the upside. Well, watch this. That's your low anyway, so mark that one. That's the swing high, which is 52. So if you just want to play this one, we can do, see, 78.6. Exactly what it got bounced. So you're okay with this. So now you just have to make sure you watch the 48.57. You see right there, 78.6 from this swing right there. And now we're gonna have to you have to see if you don't have to go that far because you need to simply take this high and you have to watch this to see if the price can break to the upside. If the price managed to break to the upside, then you let me know, then I will run the upside for you. But right now, there's nothing that much. This is all the better is gonna get. Yeah, if it can be fourth. The fourth has to go all the way back up here to turn the here 55, 85 for the swing to do. It has to take out the previous swing high because the price right now is making lower highs and lower lows, right? So now you need to take out not this because that's your first swing low. That's your lower high right there, which is a second 55.85. If the price managed to move back up to 55.85, then the number will turn 1. That will open up the upside for you. If that would be the case, then it will most likely, I mean, still it's an early to call it. If this turns like this, that would be like this. So it's going like this. Okay. So it's gonna so then you look for this. That's when you're gonna have a second swing. Then you can have a potential, something like this. Again, I'm guessing for now, but that helps. That will a lot of time I've seen, that could turn like this. Because what happens is obvious is, well, I don't know how long. If the price managed to break above and takes out this, it'll become 1, right? So after 1, that will eventually settle down in 2. So if the second swing is going to come, and if you're going to run your retracement from here to here to look for the second swing, it's going to start giving you that look anyways. So what does that tell you? So always, always 10 step ahead. A kitty cat, we looked at them. Then it's on a beat up list. Where I took a shot at this, just it didn't play out. Here, caterpillar. So we gotta go. Um, See, caterpillar is right here. I like this. It's just the last trade that we didn't play out. I like this one. This one and John Deere. John Deere just too damn expensive, double the price. So it's like it's a Dow 30 stock, and I like trading Caterpillar more than John Deere. You can Okay, what are you posting here on the main chat? We could see a tech rally for the ages on Monday. White House made the right move at the right time. This changes the entire narrative for the big tech with this exemption. This guy, Dan Evans, this guy has a very horrible track history of being right. Trump exempting a significant part of Chinese export to the US from tariff before negotiation had been started. Any concession that had been achieved is a rather huge negotiation. See, I'm telling you, the guy's gonna make that deal. Him and she is good. He's just trying to catch their attention. He's gonna make the deal. US published tariff exclusion, the computers, smartphones. Yeah, just I'm telling you, this I've we spend some time here. You take I can copy paste it or um I'm gonna stop this recording. It's been too long.